Hello there, it's Francis here from Generational Wealth Academy. Now on today's video, I'm going to be showing you how to make anywhere between 50 bucks to $100 on a daily basis. That is obviously in every trading day if possible. Now, what I am going to be looking at today is what I'm sure you might have heard of before, and that is engulfing candles. I'm going to be showing you how I trade it. Now, even before we carry on, just a disclaimer to say I am not a financial advisor. I am basically, doing this, just for educational purposes or even as a video tutorial. That is basically what it is. So I am not saying, you could definitely make $100 from this. I am basically saying it's a way to potentially do that if you follow obviously what I am going to be showing you today. Now let's delve right in. More of that disclaimer would be in the comment section somewhere in this video. Now I have actually included period separators in this video. Let me just take it off and put it back on. Now those lines are period separators. It's the 1 hour time frame here, even on USD CHF, that's US dollar Swiss franc. Now this is today. Today is Wednesday, the 20th of March 2019, and even from today's chart you can see there is an engulfing candle. As a matter of fact, more than one engulfing candle which you could have traded profitably. Now this is obviously the current candle, the current hour, but earlier on in the day there was an engulfing candle here whereby this particular candle, let me just see if I can make it a bit bigger, let me just zoom in a bit more, whereby this particular candle completely engulfed this candle. The green candle engulfed this candle. Now when you talk of engulfing candle, most people want to trade using the body of the smaller candle, and that's exactly what I'm doing here. You can see this whole green candle, or this green candle engulfs the body of the candle completely. As a matter of fact, it engulfs the whole candle, just not just the body, but the body and the wick, at least the top half of it. So what I would do is normally I would enter the trade when this green candle closes, which basically means I would trade it up. Well, yes, it came down a bit, but I would trade it up and could have gotten anywhere, from 10 pips to 13 pips, even as you can see there, depending on when I came out of the trade. That would have been an easy £100 in my pocket, even for myself speaking here from the UK. 10 pips, using a standard lot size, definitely is $100. So if you're targeting 10 pips with this one, you can easily get $100 if you get your 10 pips. But as you can see at the bottom right hand corner here, I'm currently over 15 pips up. So if you trade and you get 15 pips in your trade, that obviously would be $150 if you're using a standard lot size. Now to do this, I would recommend you have at least $1,500 in your trading account. 1,500. If you're in the UK, if you are in the States, or wherever you are, just have at least $1,500 to $2,000, and you should be able to do it targeting just 10 pips. Now if you have $2,000, obviously it means you're going to be risking 5% of your account. Now for some people, for their regular trading, that is a bit huge, but with this strategy, since you are going for just the 10 pips, basically risking 5% of your account is not too much, because the high percentage winning rate of this strategy is such that you can do that comfortably. If you do it well, I would say 80% of the time you would win. 80% of the time. So you can see here there was an engulfing candle here. There was also an engulf. Well, this is perhaps I would not quite take this because, you know, we are probably coming to the high of the day, you know, but this one definitely I would have taken it up. And then this one could easily have been traded as well, you know, taking it down. You can see this candle completely engulfed the body of this green candle. Now, depending on how experienced you are, you know, I would say you can either take this trade or leave this one out. Why? Because you have a huge wick at the bottom. You know, this obviously speaks of perhaps some kind of indecision in the market. So I would say if you're not experienced at doing this, to leave out any setup like this whereby, you know, the candle that is engulfed has a large wick, especially as it has the wick at the bottom, well, at the bottom and the top. But here, for instance, you have the wick at the top and the bottom, but it is not really that big, so you can actually enter this trade with confidence. Now, going to another day, like I said a while ago, this is today. How about yesterday? Was there any engulfing candle or trades that you could have taken yesterday? I would say definitely. Now, if you consider this one, for instance, you know, the trend was already bearish. Let's zoom in again. Let's move it. So if you consider, you know, the fact that the trend was already bearish, even though it does not completely engulf it, you know, you could have taken this trade. But like I say, based on your experience, you could have left this out. But one that you definitely should have taken would have been this one. Even as you can see, the red body here completely engulfs the body of this candle. So you definitely, you know, could have taken that. Now, which other one could we have taken? I would say we could have taken this as well. Let's zoom out. Perhaps you could have taken this as well. You know, now you might want to know where I would place my stop. Let me just show you. You know, when I'm trading engulfing candles, I would usually place my stop, you know, somewhere above the candle or below the candle that's been engulfed. In this particular case, let's do this. In this particular case, in this particular case, I would have placed my stop somewhere around here. I would have placed my stop here. It's a bullish engulfing, which means I'm trading it up. I would have placed my stop somewhere around here. Who knows, maybe even a bit lower, you know, below the swing low. However, because you are risking 5%, I would say not to, you know, not to place your stop loss, you know, too far out. So just somewhere here would have been fine. So even if it came back, it would have hit your stop loss and taken you out. However, this is where I would place my stop loss. Now, for this particular trade, for this other trade, you know, we're looking to take it down. I will place my stop at the top here, so that even if it goes up, I'll be taking out, you know, of that trade. Now, so on this day, definitely I have found, you know, a trade which we easily could have entered, you know, to make the £100 or the $100. The day before, definitely I would have taken this one, you know, obviously because I've been doing this for some time, I would have confidently taken it. Otherwise, another one you could have taken, I would say, is, well, no other one that you could have taken confidently. So it's not going to necessarily be the case that you find one every single day if you are new to this, but with time, you'll be able to find one every day. And it does not have to be on any particular currency pair. It could be on any, well, I would recommend you have at least 5 currency pairs you look at every day. So if you don't find it on Euro USD, you would find it on pound USD, or on USD JPY, or in this case USD CHF. So on this particular day, which is a Wednesday, we found one here. On a Tuesday, we found one. Let's check Monday. How about Monday? Let's just see. Okay, I mean, I can see one that stands out even, well, maybe more than one, but this one is definitely a good one. Let's do this. Let's do this. Where's the arrow? That would have been a good one. Where is it? Where is it? Where is it? Where is it? I've lost it on my screen. Oh, where is it? Come on now. There we go. So basically, this would have been a good example whereby the candle, the red candle, completely engulfed or almost completely engulfed the green candle. I would have placed my stop at the top somewhere here. I would have entered the trade at the close of this candle and taken it down. As a matter of fact, I would have got more than 10 pips on that one. Up to here would have been 16 pips. Even if I was going for just the 10, I would recommend you start off going for just 10. I would have closed out the trade here. So on Friday, on Wednesday, Tuesday, Monday, how about Friday, the week before? We easily could have found one here. That was a super duper one. That would have been super duper duper super duper. So this candle here, let me move it. Let's do that. So this candle completely engulfed this one. This is a good example of one candle completely engulfing the other. So you don't have any wick sticking up at the top. It completely engulfed it. Now, the only thing with this candle, because the engulfing candle is a huge one, I would say you trade this with caution. You can enter at the close of the candle here and take it down and be ready to enter in a second trade if it moved up. Because usually when you have a huge candle like this, there's a possibility that there could be some retracement even to as far as the 50% mark. That's halfway. So I would have said, you know, enter here if you are confident and you're going to be aggressive about it. Enter here, and that's my daughter singing now. But anyway, you would have entered the trade here. Okay, I was interrupted there by my singing daughter. Anyway, you could have entered the trade here at the close of this candle if you are aggressive about it, or wait till it retraces to the halfway mark or even somewhere here and enter again, you know, to take it down. But obviously, if you are risking, you know, just 5%, I would say, unless you have enough capital, do not take two trades. Just the one would do. And you could have taken it. You know what? Let's do one more. That is Friday, the previous week. How about Thursday? This definitely would have been a good one as well. This candle engulfed the other one. So you can see, you can basically see that if you decide to just wake up in the morning, 8 o'clock, you know, for me, it will be the London session, 8 o'clock in the morning till 4 in the evening if you have to. Think about it. If you had a job 9 to 5 or 8 to 4, 8-hour job, you basically will be at work anyway. So if you are going to be at home, you might as well be ready not to sit in front of your computer. All you need to do is just to come check the computer screen every hour, as it were, you know, because this is a 1 hour time frame, and you basically come check knowing that a candle, you know, would definitely have fully formed and closed by the end of the hour. Just check every hour to find if there's something on the screen that you could trade. Now, you could have traded this one. This one is engulfing it. You could have even traded this one up. So on this particular day, you could have gotten more than 1 or even 2 trades from this particular pair alone. So you could have traded this one down. How would you do that? Now, put it this way. if you had entered here at the close of the candle, even though the candle, went up a bit, went up slightly, but guess what? You would have gotten about 8 pips from there. Now, if you had decided to, mind you, I did say anywhere between 5 to 10 pips, or 50 pounds to 100 pounds if you're in the UK, because sometimes you just have to be okay with 5 pips. You could take it even if it was to go up, even if it had gone up, even if the price had retraced on you, it went that far. That was how many pips? Let's see. Oh, okay, that would have been, like 13 pips, 14 pips. I would say not to go there, but you would have been contented. You would have been content just taking 8, 9 pips there. But guess what? There was another one, before this particular one, and that was this one here. So on Thursday, you could have gotten 2. That's why you can't afford to be greedy, because if you miss one, so a friend of mine says, trading is like waiting for the London bus. If you miss one, wait for the next one. Absolutely. So if you had gotten this one, oh, sorry, not that one. I meant this one. So if you had gotten this one, you'd have taken it all the way up. That would have been your 10 pips. Anyway, I do hope you do put this into practice. Demo it. Use your demo. That's what it's there for. Demo until you are confident and you can begin to trade your live account. Now, do not hesitate to click on the subscribe button. Subscribe even to receive more videos from myself. Go through my channels, and whatever video strategy or whatever you have in mind for me to do a video or a tutorial on, let me know. Now, once you click on the subscribe button, also click on the bell next to it. It's only then you'll be notified whenever I upload a new video. Now, this video is what I intended to do for members of my team, those in my trading community who use my auto trader and who use other auto traders, just in case they wanted some extra, just in case they wanted to begin to apply themselves manually on the chart or in the trading in the market. I thought I'll give them something simple. So if you're watching this, enjoy, and see you in the next video. Okay, now, God bless.